My name is Tricio. I'm the Chief Strategist at Tricio Investment Advisors, and this is a quick look at how we look at the S&P 500. Those of you who've attended our webinars and seen our research papers will recognize the long-term chart of the S&P 500. We've always drawn it back to the global financial crisis lows of 2009, and we say, yep, it's an ascending bull channel. This is a weekly chart with 13 and 50-week moving averages and semi-log, so you can see the percentage moves. Our worry for the last few months has been we've been bumping into channel resistance. We know that timing the market beats timing the markets for most retail investors and investment fund managers. However, we've been making the point that rebalancing portfolios makes sense after the big gains we've seen in the stock market over the last few years. And you should be carrying the weight of equity exposure that you feel comfortable with. We've advocated the RSP that's the Invesco ETF. That's an equal weight S&P 500. There are other funds available. It's the one that we use as a proxy for this sector of the market, though. And we've said, look, if you're worried about some of the valuations in the big caps and the fact that a small number of shares makes up so much of the index, you can spread the risk around and have an equal weight index. That won't protect you from a 20% equity market fall, though. It'll just lessen the blow a bit, maybe. So it's one of those things that there are some drags on this market that could see a pullback in the S&P 500 to the 50-week moving average. That's around 6,400, and then down to the rising blue line. Yes, we're looking for a pullback. No, we're not looking for a move down to the bottom of the channel, but this pullback could be significant. There's a lot of risk here that we are keeping an eye on. One is price of oil. Two is what the central banks think about it. It used to be they'd say it's a one-off, ignore it. Since the Russian invasion of Ukraine, we saw inflation spike higher. So there's a slight tendency to think that the central banks this time around might think, we can't ignore it. Watch out for inflationary push factors. It's worth watching over the next few weeks to see how, one, the price of oil unfolds. Two, for Europeans, it's going to be the cost of natural gas. Three, currency flows. Four, bond market reaction. So the U.S. attack in Iran does have potential ramifications for stock market investors. This is not going to be a one-day event. Keep an eye on the downside risk here. For long-term investors, we favor timing the market versus timing the market. For further information, please contact us at info@tricio-advisors.com. And you can also ask us about our Ask a Buddy service, where we help professional clients build resilient portfolios.